Hi, this is James Shrug with Westpac London's end of day report for Tuesday, June the 18th. It was a bit of a mixed day on European equity markets today. There was some positive sentiment at the open, reflecting speculation or talk that a Chinese interest rate cut might be in the offing. But that didn't really carry through in a substantial way. We had some economic data out today. The German ZEW analysts survey, their expectations component rose from 36.4 to 38.5 in June, still way down on the 48 plus readings we saw late in the first quarter, but still indicative of a pretty decent expectation for the German economy on the part of those analysts. Now, in contrast, the current index actually slipped from 8.9 to 8.6. That's its third decline in a row, and the average level of the current index for the second quarter is only just slightly higher than that in the first quarter, which suggests that analysts don't expect much acceleration when we get German GDP figures for the second quarter from the 0.1% growth rate recorded in the first quarter. The UK CPI accelerated from 2.4% to 2.7% in May. Airfares, apparel and gasoline or petrol were the main factors at play there, but still whatever is driving us, it's now 3.5 years since inflation's been at the 2% target in the UK. Producer prices in the UK accelerated slightly, but from multi-year lows in April to just slightly higher in May. So it's clearly not the factory sector in the UK that's driving the higher CPI. It is actually legitimately, as the Bank of England points out, an unfortunate series of one-offs that have just come one after the other. The US data today was, well, not particularly good really. On housing, we saw a 6.8% rise in starts in May, but a 3.1% fall in permits. Now, ongoing volatility in the multiples, blocks of condos, in the multiples component was the main driver of those numbers. But the single family starts figures, they rose a very soft 0.3% in May, having fallen almost 9% in March and April. So that's another indicator of the housing sector that suggests that there's been some loss of momentum, or at least the upswing that we saw through 2012 hasn't persisted into 2013. Having said that, single family permits did hit a new cycle high. They rose 1.3% in May, and their annualised pace is running ahead of that of starts, suggesting that there should be limited further downside ahead for starts. And in fact, the jump that we saw in home builder sentiment earlier this week also points to some turnaround in the currently sluggish housing activity story so far this year. The US CPI came in at plus 0.1% in May. The core rate was slightly higher at 0.2, although that followed two soft 0.1s in the previous 2 months, and the annual core rate at 1.7% is still at a 2-year low. Just worth noting that both medical care and food prices fell rarely. They very rarely do, just by 0.1% for both of them, but that's just another indication that US inflationary pressures really are pretty benign. There was a rise in clothing prices of 0.2%, but that followed 3 consecutive monthly declines, and rent, which makes up about a quarter of the CPI, was up slightly above trend, 0.2%. But and gasoline prices were flat in the month. So that was the main data today. US markets have done somewhat better than European markets, with the Dow currently up 0.8%. It's at 15,301. And of course, you've got the Fed meeting underway. It's a 2-day meeting, and we'll get the Fed's announcements tomorrow afternoon, London time. In terms of commodity markets, more losses there, with gold down 1.3%, $1,365 an ounce. Copper prices down the same amount, 1.3%, and oil up just over 0.1% at $97.92 a barrel. The Aussie dollar, it's at just over 95 cents at the moment, 95.07. It did dip to just under 94.5 cents earlier in the London session. So this week so far, 2 days, we've already seen a 2 cent range for the Aussie from 96.5 on Monday to, as I say, 94.5 today, but it's a bit above the bottom end of that range at the moment. All right, that's it for today. I'll be back again. Actually, I will be back again tomorrow, but somewhat early report, which might miss some of the Fed detail because of a commitment I've got tomorrow evening. So if you're watching tomorrow, don't expect a full analysis of the Fed. I'm sorry.